Hey everybody, Economic Ninja here. I want to do a story about gold and silver and their reaction to today's CPI numbers. Absolute just explosion in numbers, but the sad thing is we've been seeing this ramping up month after month, and we are not at the end yet. It is going to get worse, and so I'm going to explain in the charts what happened, and watch gold and silver, and actually prove that the market is waking up to what is going on. So this is not a story that I covered in a video today, but it's from the Hedge. Feel free to take a look at it. I'll go ahead and link it too in the description below. CPI preview, brace for the highest number in 3 decades. And this was put out before market open, and it was absolutely correct. We now have a CPI number that was just printed that is now, let's see, what is it? We haven't seen this high of a spike in the last 31 years, okay? And next month, you're going to see an even worse one. The supply chain is one thing, right? That's causing a congestion in the network or in the world. So it's causing higher prices, like with the chip shortage and things like that. But there's a lot of other factors, and one of which is the constant amount of, or the ton of money that's flowing into the world right now through all these central banks that are printing just tons and tons of money. So one thing, I just wanted to go over this little quote from Jim Reed at Deutsche Bank. Further, and this is regarding the CPI number, this further undermined the transitory narrative. And in fact, if you look at the last 7 monthly readings, 5 of them have come in above the median estimate on Bloomberg, with just one below and the other in line. Okay, so transitory inflation is an absolute crock of crap. All right, that is the Federal Reserve trying to get you to, oh hey, yeah, there's something over here, but look over there. Just trying to get you off the narrative. And to say that this is going to get worse is an underestimation. Or it's an understatement, right? Now, this isn't trading advice, guys. I'm not a financial trader. I'm just a dude, the real hawk, and a dream. But it is very important. Now, this is what I wanted to show you. When those numbers came out, this is what happened. That's what we saw the silver price do. It was pretty darn impressive. Absolute spike up from a little over 24 to $25. Impressive. Now you're seeing this come off, and obviously that is traders taking profits from such an explosive move. But what this does is this tells you a lot, because gold had a similar, yet on a percentage basis not as impressive of a move. This is showing you that the world, especially Wall Street, is waking up to what's happening. That's a shock. That's shock and awe, right? Holy cow, this happened. But last month it did a very similar move, right? Now a lot of people would say, yeah, but look, Ninja, the market's still, it's still well below. It's almost half of its all-time high. It's probably almost exactly half right now. This is my point, is that gold and silver move at the end of a inflationary cycle or a hyperinflationary cycle. And when they go big. Now, there is a massive difference between buying physical precious metals and buying paper, because paper can get completely smashed down. But in those times of uncertainty, just like February 1st of last year, or actually, no, the better moment is during the stock market crash, mini crash, when the whole world got shut down, when this whole thing started a couple years ago, and silver got just completely slammed down into, I want to say it was $11, but you couldn't buy a physical coin for 11. They were like 19 or 20 because it's such a small market. So what you see on these numbers right here, these numbers that are being quoted out of the stock markets, they're really irrelevant. And I'm going to be very curious. I'm going to shoot Andy a call a little bit later and see how this affected sales. I can only imagine today is going to be a pretty big day for sales. Now, with that being said, if you want to look for deals, I do have a link that I'll put in the description below, because I believe that I've found some of the best prices. Miles Franklin has been really good at matching prices if they can, but you know what? When times get tight, it's interesting. Now, let me give you what I would do in these kind of situations. When you see spikes like this, I would wait for a little bit of a pullback, right? Now, with that being said, it's pretty much about pulled back almost within 30 cents of where it was the last couple days. So we're doing pretty good there, but I don't get super excited I don't FOMO in. I learned all my lessons from crypto market. And sometimes it's run away from me. But, I just want to show you this. This is what happens. And this, right, is what happens during really gnarly events in the economy, especially hyperinflationary events like in Venezuela, Turkey, things like that. People go running for the metals. And it's not just a spike up and then a come back down. This was a knee-jerk reaction. This were algorithms firing off, doing trading, and then it just became just bigger and bigger and bigger. What the real big move that is going to cause precious metals to go over all-time highs is when the general public gets scared. And right now, quite frankly, they're not scared yet. But I believe in the next few months, everybody is going to be fearful of inflation. And I think the really scary day is when we see that CPI, and we'll go back to this real quick, because we all know the numbers right now. It was in the 6. It was like 6.2 or something like that year over year. When we see that hit 10%, watch out. It'll be like when Bitcoin hit $10,000. Something psychological. It affects people. When you go from single digits to double digits, it's a whole new world of panic. All right, guys, that being said, I hope you got something out of this. I thank you so much for your time. The Economic Ninja is out.